Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So there we go. Yeah, let me get started right here with the Friday. We had a little bit of some news here at 6 o'clock this morning with the British. At 8:30, we have some Canadian news, unemployment change. And then all day we have a G20 meeting. So those are going to be effect. Some of our developers have suggested that if you have some of the software, just put it on pause or to turn it off during perhaps today and maybe this weekend shouldn't make too much. Usually the markets are closed over the weekend, but you may want to just pause it today and just let it let it do its thing, but not take any new trades because there could be some volatility today. We call today Open Mic Friday, and we're going to anybody that's here that you're welcome to raise your hand, and we can turn your mic on if you have any questions. This is going to be pretty much of a we're try to be pretty casual on Fridays. Try to clear up any questions that maybe people might be having. And we have some new people here that I'm sure you have some questions, maybe feel a little bit lost at times. This is a good day for us to try to work out some of those bugs that you may be experiencing and try and shed some light on the subject. Also, one thing I find out has been helpful is by when I started teaching trading analysis and teaching what I do, you find out that you learn more by teaching. Sometimes you do by listening. So if you can explain what it is you're looking at, sometimes that helps to keep things clear in your mind. And what we're really trying to do is we're trying to, excuse me, we're trying to train our brain and condition our brain so where we can allow our subconscious to see a lot of these things on these charts without having to really think about it. I mean, eventually, as you see more and more and do it more over and over again, you'll start seeing the patterns. You'll start seeing things that'll become a little bit more automatic. Give yourself the time and give yourself the ability to not beat yourself up as you're learning these new different techniques because it's not something that comes natural, and eventually your eyes will see it and you'll be where you want to be. So having said that, let's go to some charts. And so we're going to check out our heat map and see our Hercules and see what's hot and what's not. And right now I'm looking at the New Zealand and Aussie are strong. The Japanese yen and the US are weak. That's pretty much on both time frames. British pound's fairly strong as well. So basically looking at New Zealand, Aussie, British, and trade the strength of that and trade it to the weakness of the Swiss, US, and the yen. So let's just go and pick one of those and we'll see what we can come up with. Brian, do you have any that you're looking at already?
I'm already in.
Of course you are.
Yeah, of course I am.
Exactly.
I've already closed out my first pound US. However, I just entered again.
Pound US, you say?
Pound US, I have almost closed out the Aussie US. It's close to being done. I just entered the Aussie yen.
Aussie yen. Let's take a look at the Aussie. Let's take a look at the Aussie yen. And let me go to the other charts here.
Good picture of the Aussie yen on my screen.
Aussie yen, Aussie yen. Do you want to share your screen?
Well, sure.
Okay, right above the blue one, right?
There we go over here.
Oh, there we go. Yep, there we go. Aussie yen.
Gotta find you guys again. Keep looking at it.
I got it right here.
There you go. You got it up?
Yeah, I've got it up. And let's see, Aussie yen. Let me put that on another one. Get some lines here for you.
Yeah, so what I'm looking at is at the 82.26, call it, is a blue fib line. Right on that blue fib line, we have a very strong area of supply. So my target is before that, obviously. We just broke the red line on the fib 82.05, and had a strong move. And once this candle closes here in about 8 minutes, it should be a new demand zone created below. So if you didn't get in right now, there's still time to wait for a pullback. I jumped the break is what I did. It came out of it. Yeah, go ahead.
What time frame do you usually start on for everybody?
15 for me.
Okay.
And then I dropped down to 5. Now hour goes down to 1.
Okay, so what I'm looking at, so everybody seeing my screen?
Yes.
Okay.
Yeah.
So basically I'm looking at this pivot high, this pivot low right now, just coming off the low. Now this was pretty much the week high right here, and we could maybe use that as well. But right now this is the last significant push down in the last few days. If we look and measure the distance of this one, you can see this is going to be. Let's see. This is the Aussie yen, so this is basically that's about a two. Oh, let's see. Is this
$200 move.
How much is that? How many?
200 pip.
A 200 pip move. Yeah, and that's a significant range. We're looking at basically each one of these little zones in here. And I'd like to try and see. I'd like at least 7 pips in between these ranges when I draw these. Of course, the bigger the spread is, the bigger these areas are going to be in between. These are plenty good. This is you can see where it's coming off of a bottom, and it's right now pretty much back into the. It's coming up into a 50% retracement from this move. We do have some downward pressure. We have the higher time frame moving averages are still above it. It's coming in to recheck this one right here. So we did say that the Aussie was strong to the yen.
Mm-hmm.
And so just remember, if the Aussie is the first currency of the pair and it's strong, that means we're expecting this thing to go up. So what we're going to be doing is we're going to be looking for pullbacks as it comes up into this zone. Now, as we drew this, we have our 25% range up at the top. You do realize
you're on an hourly?
Oh, thank you. I did not realize I was on an hourly.
It looks basically the same. It's just
it's probably gonna look about the same. But yeah, that's
you broke above those moving averages. I knew you were getting ready to talk about moving averages, and I was thinking, okay, he's breaking above. He didn't know it.
There we go. So this was the line that you said 82.06.
82.26. 82.26 is your red line, or your blue line, I should say. 82.26.
26. I had 06. Okay, 82.26.
And 82.06, 82.05. Actually, 82.05 is your red line that it's just passed. So you're right in the middle of the range that I usually use.
82.05 was the other one you say?
82.05 is your red, which was that usually resistance, but it's now support.
82.05. 82.05. And so right now you can see we're right in the middle of these two blue lines range. And you can see they're very close to where these Fibonacci lines are based on what we started to draw. Let me just tighten this up a little bit so I can see where my ranges are. And again, we're going to draw our upper 25 and lower 25% shadow areas. So we know that this is where this move came from. You can also see that you had a little bit of it dropped. It came out of this upper zone, came back up, went back into it, and then it started its journey on down south. Hit the bottom, came out. It's just now coming out of it over here, but you can see where it was going sideways inside this 25% range. And if you look and see the measurement on that, you're looking at 50 pips. That's a relatively good size range on this.
Especially for this pair. This pair only gets 8 pips every candle-ish.
And remember with the yen pairs is that they have a little bit different spread and a little different, not so much the spread, but the ranges are a little bit different because of the range difference between the dollar and the yen. And you'll find that with almost all the yen pairs. That's why you can see I have basically I have basically a 3 decimal point range, as opposed to normally when we talk about the pips, we have four places to decimal point. So it does skew things a little bit, but the price movement and the Fibonacci still pretty much work the same. And you can see, like right now, we're in a uptrend. It is crossing the higher time frame moving average. This is my 62. This is my 200 moving average, and everything is moving in the upper direction. So right now we don't want to be taking this thing short, but it is hitting our orange, where I put my orange targets. Now remember, we go from high to low as we come back, and as it's going from the high to the low, we're creating these target zones where I'm going to be putting these targets on. Make these orange so you can. I'm trying to stay consistent with the coloring.
And I went ahead and took profit on the Aussie US. That's already done.
And so there's orange. First, there's so here's our target 1 area right here, and you can see it's already past target 1. It's heading up to target 2. And then it's coming up on target 2, looking for target 3. So now at this point, we're looking, okay, we're in an uptrend. We're crossing all of our moving averages. All of our moving averages are coming in the right direction. We have the green, the yellow, and then the orange moving averages. It's crossing over the 200. So actually, these are still below it, but it's now coming into it. So as we come into and so what we're doing, we're not going to try and just jump on this thing. We're going to wait for a pullback. And as you go into these lower time frames, I'm on a 5-minute chart now. As you go into
do you see something at the 82.10? That's where I would see a pullback to.
82.10. Let me go and draw the Fibonacci, the reverse Fibonacci's.
I'm not on a 5-minute, so I'm figuring you'll see something.
Okay, first right now I've got my zone set, I've got my target set, and now I'm going to change my Fibonacci range. Now I'm going to be looking at seeing to try to see where here's our strong move up. I'm waiting for a pullback now. You see, we did get the crossover. This was our target 1. And so now we're waiting for it's coming up. Now this is going to be the next target. This will be our target 2 area. Yep, that's be our target 2. I'm bringing target.
What number's that? What number's your target 2?
Target 2 is at 82.32.
Okay, that's the back end of a supply and demand zone, by the way.
Okay, so it's got a little area to go through first.
82.25.
So as we're looking at, this is nice. You can see it's trending: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Here's our impulse move, and then we're looking for the retracement of the move. So from this, we're looking up into here, and we don't know where this is going to end and where it's going to start retracing. What I'm looking for is to see however high this gets. I'm looking for the pullback, and I'm going into a 1-minute chart just because I can expand it out a little bit more. Give you a little bit better visual on this. If I can. There we go. And I'm looking for the pullback. I want to see it come into at least a 23% retracement. Now, I prefer to see a close of the 23 and head down, but I want to see at least tag this 23. My main area I'm looking at is the 38 and the 50 for the pullback. Now, again, we don't know where this is going to go. Now, this is one of our fib lines that Brian pointed out to us. And let's see, what kind of spread do we have here? I'm looking at the yellow to the red line. So we have about 1.5 pip spread, and it's still pushing up. We're waiting for it to find the high, waiting for the pullback. And because we're looking at this as being our target. And depending on how deep it pulls back would depend. It's like pulling a bow and arrow. That the stronger you pull the arrow back, the higher it's going to go and the further it's going to go. So the more this thing pulls back into this zone, the further away our target can be. Now I still only go for 7 pips because that's all I try to get. So right now, if this thing were to turn around, right now you're seeing the red candle developing. So we're pretty much right at the high here, or now it may go higher. It could, if it pulls back, if it doesn't get to the 23, I still may not get in yet, unless I can see that it still has the push to the upside. But this is the area that I'm looking at right now, primarily for it to be pulling back into this area.
What's your number on that?
On this one, the 23?
On your entry, yeah.
I would say at least 82.15, somewhere around 82.15.
Okay. That would be your
now that's changing because you can see this thing's still pushing up.
Yeah, I've already taken profit. It's already hit my target, so I'm looking for a re-entry.
Okay, and so you can see it still has some push. Now, I'm not going to try and jump on this thing because even though I may think it's going to come up and retest, and I would kind of expect that what may happen here is going to come up and hit that blue line, and maybe that's where it's going to retrace. and we'll see as we go along. But I'm just going to be patient. I'm just going to wait until, and actually we got the low here, we have push here. I can actually move this over to the bottom of this push and see what kind of range I have here in between these areas. That's too bad. So really right now, in order to get my, if I'm going to be looking at this as being my target, I like to see this thing pull back to where I pretty much have like a 15 pip range to be able to get to that target area. So that's one thing I like to do. I like to, if I'm going for 7 pips, I like to have at least double that range. I don't always get it. Sometimes I'll settle for 7, especially if the move's strong enough. Right now, the Aussie is still strong pretty much across the board.
Across the board.
Japanese yen is still weak across the board.
Mm-hmm.
So we're still good as far as, all we need now is a pullback enough to be able to generate 7 pips before it gets to our first target zone. If it doesn't give us that, then we just don't take the trade.
I'm going to demo now. I'm done for the day.
And so here I can move this up to this 38. I can move this up to the 50. This is my new zone because I raised my target up here. Now we're starting to get a pullback. Remember, I want to see this thing come to the third. I want to see at least tag that 23. And anything after that, the further back it goes. Now we don't want to go back too far. It should at least respect this moving average. And we're going to double check to make sure I should have a 31 moving average. I double check and make sure I get all my moving averages in here. This one should be, that's my 200. So I think I'm missing one. There's the 62, that's the dark orange. Actually, I'm going to change this 200 into a arrow moving average, which is going to be, use aqua right here. I'm going to do that blue one. I'm going to make this one a 34. There we go. I like that one a little bit better. Now, as long as these prices are, now if it pulls back and starts closing below this aqua moving average, this 34 moving average, then I'm going to be rethinking whether or not this thing's coming into a retracement, into it where it's going to start turning around. But right now it's pulling back. It's coming into my 23%. My range between right now to the, this is actually, the zero line is actually your first target on these pullbacks. You want to get, so where you can get at least a 7 pip pullback if you can. And right now we have 4. So if it pulls back to the 38, we're good to go. As it pulls back, and the strength still stays the same, and we still have a good strength on it, then I can take a shot at taking this trade. We're going to pull back, and I'm still looking at this as being, this is one of our fib lines. This is still going to be the target. This is our target zone between this orange line. This is our main target, but I also expect that maybe get a bounce off of this blue line as we pull back. Here's a pullback. I'm starting to get a green candle. It's bouncing off this yellow, and I'm just going to go and take this. I'm going to go and put a buy on that. I'm going to set my stop. I'm going to set my target. This at.
You're actually more aggressive now than I am on this one.
And here's the 70. Well, we'll see how this one works. And there we go. So right now, here's my target. I got to bounce off the moving average. Now my stop is all the way down here. You can see the stop is actually right here, right at this 82 line. I don't expect it to, I'm not going to let it go all the way back to stop me out at this point. And our upper shadow area is way up here. So we have lots of room to the upside. We have the strength, we have the wind to our back on this. We got the bounce off of this moving average. This is the 13. The green came back down. It didn't cross over the yellow, and it's looking like it's trying to retest this blue line. By the time it gets up the blue line, if it doesn't close me out, I'll probably take it out myself. Came into my zone. Everything's still looking good. We have a nice little trend working on this one. It's not a real steep. This is not a real steep trend. And so, and you can see as this angle as from this move here, now you see what the angle of that, how that's changed. So right now, when you get a nice gradual trending and then it pushes up, it's probably pushing up into the area where it's going to start turning around. We're going to bounce, but we're going to get a pullback, probably get a little pivot. It's going to come back up, and we may get a retest of this high right in here. It may go up higher. It may just stall right at this area. But if we got in at a good point, then we have room to at least get some profit out of this.
I've got an entry at 82.15.
82.50, right here at the 50% pullback line.
Yeah,
Okay.
but I'm waiting for it. I mean, it's set and forget, but if it comes even close, I'm going to market order it.
But right now I have this, the 50% line as a barrier. I've got this moving average as a barrier. I've got my 62 moving average as a barrier. And I have the trend line that's a barrier, and everything is above where my stop is. Now, if this thing pulls back a lot deeper and still gives me a bounce off of that, I may take another position and then dollar cost average from here to here, and then but my break even is going to be right now at pretty much the halfway point. But I like to see this come back down, make a little pivot, come back up and retest. So right now I'm looking for a little trend. It's not developed yet, but I'm looking for a high. I'm looking for an anchor somewhere along in here for a pullback. And right now it's trading inside this range right in here. We'll see how far back it goes. We did get this was a little of a drop, a little bit of a base drop. It's going to probably come up and retest. When it retests, as this thing moves over, it's probably going to be looking to maybe bounce off of this. So this may not be working. This trade may not work out. Remember, we did have some news at 8:30. So I'll keep in mind with that. Be aware of that.
Okay, I'm in.
All right. Now Brian waited a little bit longer than I did. He got a better fill than I did. I still feel everything's still in the right order. We have this little, here's a nice little push up, a little basing right in here. And if I pull this back even to this area right in here, and this is probably what Brian was waiting for, that little spot right in this
82.
area.
Yep, right there.
Coming to retest. Now I have two choices. One, I can just wait and see if it comes up and keeps on going. I could take another position down in this area where Brian did, and that way my average cost is going to be right about where this red line is right now. Right, it'd be right about in this area. Split the difference. It'd be right now. It'd be break even about the time where this little area was basing. A little drop, a little base, retesting. It formed that base. It's bouncing off of this right now. We'll see if this is going to penetrate or if it's going to go deeper. But right now, I'm just going to wait and see till it starts. Now, we did get the moving averages are turned around. We did cross the yellow. That is a little bit more of a concern. It's just a little deeper pullback. Everything is still okay as far as our heat map goes. If we look and see where that is on you can see that and this was the Aussie yen that we were doing. So it's the Aussie yen.
The yen's weak across the board, but Aussie's been moving a little bit.
Yeah, and you're going to get this where this is the retracement where this is getting a little bit weaker. This is getting maybe a little bit stronger, but we still have the good split on all of these. We still have a 6-0 split here. We have a 5-0 split here. We have a 5-1 split. So right now we still have the Aussie is still being stronger. So we're still okay with this trade. I mean, it's not always, they don't always work out, but most of the time they do.
But I'm not going to wait for the 15 pip stop on this one. I'll be probably out at the 82.45 area.
But I'm so optimistic that it made our first target. It's coming up. It's testing to go to the target 2, which is the orange one. We still have the strength to our back. This is just a pullback.
I said 82.45. I meant 82.04.
82.04, which is pretty much right about in this area.
That's my stop. Yeah.
Well, that's about right where mine is. That's where my 15 pip stop is, right down there. And so I'm not going to let it go that far.
No, I'm not going to let mine probably go that far either. But that's the picture as of right now.
Anybody have any questions what we're doing so far?
Gloria had her hand raised, but I don't know what that was for.
Oh, Gloria, if you put it in chat, if you want us to turn your mic on, we can do that if that's what it's for, if that's what you're asking. Do you have any?
That or she's waving like some of my students used to do. They'd put their hand up and what are you doing? Waving at you, Mr. White.
I said this is we call this open mic Friday. So what we do is ask that if we turn your mic on, we just ask that you kind of keep things somewhat on topic and be respectful. That's all we ask. And we're happy.
That leaves me out.
We're happy to hear. Yeah, we're happy to hear some voices. That way I can stop talking for a little bit.
Her hand was up accidentally.
Okay.
Okay. Yeah, so this one's still, we're taking some heat on this one.
But there is a demand zone that's sitting right now. 8213 is the back end, so this doesn't surprise me. Because if you're looking at the 5 minute, you'll see the rally, one candle base, and a rally out. It's just coming back to test that one area.
And we did bounce. That was a blue fib line at that 8226 area. That is a blue fib line, which oftentimes you'll see some bounces off of those specific numbers. But you know we're still okay. It's just a little bit of a pullback, but it's still in a strong uptrend, and we're still good as far as I'm concerned. And we wait. There we go. There's a nice strong little candle. Here's a pivot. Now we're going to see what happens when it gets up to this little trend line here. See what kind of a pullback we had. Right now it pulled back from this move up. It pulled back 50%. That is not unusual. That's a pretty healthy. Is a healthy pullback with a good range. So now the pullback to the 50, we can come up here to our overshoot area, which is up in the which is going to put us right up, which is basically going to put us right up here to this orange line. So our target zone, the fact to pull back into this area, this 38 to 50 area, we can use our next target of the 50 to 38 up above. So, and you can see that's right at where this orange line is. And so I'm going to put my target zone is going to be right in here. And you see my target is my target's already right is here. So I have.
Where's your target sitting at now? I can't see the number.
My target's sitting at 8226.
Okay, I'm at 8225, so we're right on the same line.
Well, you're gonna lead me, aren't you?
Well, that's just because I got filled earlier, or later, I should say. So it just mathematically worked out that way. I still think we may dig deep into this little zone here. I think we may have a chance to still between 82.15 and 82.13. That's only a 2 pip zone, but it's pretty nice. And we really haven't gotten too much into it. We may never see it.
Well, I said it is a Friday. There's some news coming out at 8:30, so that could make a big difference too here.
This is my last trade of the day for sure. I went ahead and did it again. And so it's 1, 2, 3, 5 for 5 as of right now. That's not bad.
You must have started early this morning.
Oh, I just turned on my computer at 6, looked at the power meter, threw some numbers up, and boom, I'm in. I don't really dig too much into the whys. When Hercules tells me to go, I pretty much look at the candles and go. And then I figure out why afterwards, for the most part, for me. I know why. I mean, we've been doing this long enough, Al, that we could do that.
Don't try this at home.
Don't try just jumping in like I do. We've had our 10,000 hours, haven't we?
Every bit. So see right now it's a nice little pullback, but see how she's expecting this moving average right here. Now if it starts crossing and going down, then I may start to rethink about maybe taking the trade off And then if it comes back up, then just re-enter again. But right now, I'm still okay with this pullback. I'm still only down. I'm not even. Let's see, where am I at here for pip wise? If I got in there,
3-4 pips at least.
I'm only 5 pips. It's only 5 pips against me.
And you're
so
fine.
I'm still at a 1-to-1 on the target pretty easily.
You're doing good, Al.
And the Aussie's given up a little bit of its strength, but the Japanese yen is still weak.
Mm. That's the same thing I was just thinking. It's not so much the Aussie strength that I'm looking at; it's that yen not moving on this particular case.
Yeah.
And guys, when you're trading Aussie against something, just because you have the Kiwi, choose either one. Don't trade both because they're pretty much the same. So if I'm going to do the Aussie yen, I would go back and do the Kiwi yen.
Now you can see how right now we're coming up, and this can see what it's going to do right around this 23%. This could give us a little hit off of our pivot. We'll see how it comes up into this area. I said this is not set. We're still waiting to see where this thing's going to go for a pivot. Now this thing is going to turn around. It's going to stall before it gets to this zero line. This thing could come down, come back up, give us our first hit, come back down, test this trend line. And then that gives us our little range that's going to maybe break out. But then we're just going to have to be more patient. You don't always know how long it's going to take for it to actually pull back and how long it's going to take. But right now we still have another almost 30 minutes before the announcement. And so that could make this could just be a pre move to
clean house.
The announcement.
Yeah.
Yes.
You had a question from Kev. Pardon me. He's wondering why you've moved your box to between the 38 and the 50. You know how it's kind of straddling 50.
Yeah. The reason why I did that was basically I was just pointing out this little zone right in here. Here's a rally. Here's a basing, and then it rallied again. And so when you get like a rally, a basing, and then another rally, it will come back and retest the base. And that the base does happen to be into this 38 to 61 area, but I just sort of tightened it up a little bit because here's that little wick of a candle. Here's some red, a green, a red, a green, and then it leaves again. So all I was doing was identifying this little basing area, which happens to be inside this 38 to 50, but also looking at if it breaks through this little base, it could very well come all the way down a lot lower to retest.
Show him the 5 minute of that base. That 1 minute's like 4 or 5 candles. If you look at on the 5 minute, it's one candle base. This is what I was telling you about when I said I could think it's going to retest back to the 82.15 because there's a rally up, which is strong, one candle base and a rally up again. And that's when I got in on the rally up. But then I said I was going to enter again when it came back to retest that. That's all it's done.
If you look to see where we talk about wick over wick, here's a strong move up. There's a little wick. Comes out, the next candle opens, it pulls back, comes back, and closes. Here's the little wick this wick was where the sellers came in. This wick is where the buyers said, nope, you're not gonna take it down shorter, and it takes it off again. This is what we call that wick over wick. You got two little candles right here, and you engulf the two wicks. And if that breaks, then you know that, and this is on a 5 minute chart, so you're only looking at one little candle. So this candle was 5 minutes. You had 5 1 minute candles in this little range right here before it took off again.
And you guys need to be looking for those little wick over wicks with a one candle, maybe two candle in the base. When you start getting into the 1 minute charts, that little one candle's 4 or 5. So it's actually 5 minutes. So it looks a little bit different. But when you get into higher time frame, and you see that one little candle with a wick over wick, that's going to be an area where price moved out. That when you see that kind of strength, that's a good place to keep your eyes focused on. And like Al said, if it breaks this, I really don't know where. I mean, the next really true area of of support is at 82. True area.
All the way down here.
Mm-hmm.
Yeah.
And that's a long ways.
You can see how gradual this was here, and then all of a sudden, boom, it takes off. which is what's formed we have our anchor, nice, slow, gradual trending, takes off, it gets an impulse. Now it's coming back and it's going to probably, this area right here is a basing area right here where you can see where the price came up, and you can see right where the orange line is. And I said,
Now,
but we did get our 5-minute close. We got our 5-minute close above the line. It came back a little bit. This was they passed it, came back, checked it a little bit, went a little bit deeper, and then it took off again. But we had the close. We had a little bit of a pullback from it, and then it took off. Now it's coming up to say the next target, like we said, is the next target is the next orange line, which is
now,
right up
Al,
here.
we
Yes.
did the same thing. We showed everybody going from the 1 minute to the 5, where it's easy to see the one candle base and the explosive move out. If you go to the 15, you'll excuse me, if you go to the 15, you'll see why we said 82 was the strength. You got 3 candles up, 1 candle base, and an explosive move out. So you look at the bottom of that candle, of the red candle there, that's the 82.05, I believe. So that's another area your eyes should be drawn to.
So I could actually take it, this little zone that we have here, we can take it and engulf this little 15-minute candle.
And that tells you where your stop's going to be. Yeah.
And that tells you that, so if it breaks this 15-minute candle, and you've heard me say before, if you see like in an area where you have lots of wicks, you come over here, you have a wick. You come over here, when you hit the wall of a body of a candle, like right here, there's a little wick. You come over, you hit a wick, come back down. You come over, no wicks to hit. You hit the body. This is where if this wick breaks, there's a very high probability that the price is going to come down and retest this little wick down here.
And what's so funny about what you're saying, Al, is there's actually a demand zone at 81.72, right where you're starting to point at.
Right here.
Mm-hmm.
Yeah. And you can see this is where it launched out, and we have another little, we actually have this, we can actually take this trend if you really wanted to. We could take it down to this candle. There's an anchor. Here's the hit right here at the little green. Here's the hit. Here's the anchor. Here's the hit. Here's our trend line. And you can see right where if this thing comes over a couple more candles and it pulls back, it's going to be looking right at this little orange line, which is right where the trend would be. And we're going to just see now, I'm running right now, I'm on a 15-minute candle. So right now, one thing about it, if you're on the higher time frames, it keeps the emotions down a little bit because it doesn't seem to be quite as aggressive of moves. But nonetheless, it's still, all we're trying to do is to put these price movements under the microscope and try and get as tight of an entry as we can with as tight of a stop as we can.
Yeah, you want to know that solid stop. That's the key, because that's what people do. People don't normally move targets; they move their stops. And so once you put your stop in, once your order is set, you want to do 15, but you really want to go back then during the time that the trade's happening and analyze, okay, can I save money now? Can I, without take myself out of the trade, where's a good spot where I can put maybe it is 15 pips, but if you know it's 10 and it's very obvious it's 10, then why would you want to risk the 15? Sometimes I've seen Al get it up to 7, 6. And it's just because of looking at the candle analysis that he'll say, okay, when it hits 6 or 7 pips, I'm out. And he won't necessarily move his stop, but he'll be ready to pull the plug once he, manually.
Because I do that is because the picture's changed.
Right.
And if the picture changes, you get out of it, you take your small hit, because if it changes back to what you were right the first time, okay, you lost a little bit on the first trade, but there's nothing saying you can't jump back in and use the same thing all over again. I will do that. I will do that up to maybe 2 times. If I get stopped out twice, I move on to another pair because the pair's not playing in the sandbox very nicely.
Stealing your blocks.
It's stealing my blocks. It's stealing my emotional inventory.
Well, they say that trading is 99% mental and emotional, and it is. That's why, especially with the way Al does his scalping and the way I do my swing, it's so mechanically boring that you really don't have a whole lot of time to think about it. It's just, it is what it is. And it used to be where every time I'd win a trade, it was like, hey, I won a trade. Well, that's because I was surprised. Now I'm not really all that shocked. So that when you get rid of the hoopla, it's kind of a nice thing because you free yourself up from the expectations of winning every time, but you have the anticipation of winning majority of the time.
And you see that right now, I'm just looking on a 15-minute chart. I mean, it's like this candle just seems like it's taking forever. So it's kind of boring. It's kind of boring to watch. But we also know what we're looking for. And you can see like this candle formation here. We had a nice little candle here, had a big green candle, a red candle, followed by a green candle, and followed by a trend. Here we had a little candle, big green candle, the red candle. Now we have a green candle, hopefully, and projectively, we're looking at still going to start trending on up and tag our target, which is again our next target is the orange line. It's going to come up there. It's probably come back to a little basing again, and then we still have that third target. Now, if you want to wait around all day long for you certainly can. There's a good chance with the strength that we're looking at, the Aussie's still getting back strong again. The yen is still fairly weak across the board, although there has picked up a little bit.
Yeah.
But it was still nothing to be concerned about. But you can see how this really does cut down the emotion if you're just looking at this. We've got 15 minutes before this candle is going to close out, and it's not setting the world afire with movement.
And guys, when you're doing this, Al and I, like we said, we've had 10,000 plus hours on this stuff. What you want to be looking at when you're looking at your candles is look for the big candles and then look left. Look for the explosive move and then look where that explosive move came back when you go into the left. So when I'm looking at this particular chart, I'm looking back July. Where's your pivot low? Your pivot low where you drew the red line from all the way down the bottom?
Oh, here?
That one right there. I see a red candle blasting up. Then I see a green candle, not huge, but then I have a basing candle and explosive move up. And then it came back to retest that candle and had the big move. Do you see what I'm talking about, Al?
I'm not sure which one you're starting
right here, right there. So you have your pivot low.
Yep.
It moved up. It gave us another candle moving up, but then it came back and sat there on a red candle for a little bit. The next candle engulfed it and bypassed it. That move right there is a pretty strong move when you look at the other candle. This next candle that was huge went back all the way down to the red area. No, keep going back to your left. The big explosive move out of that pivot. Right, that one. Look at the wick that came down to your right.
Here.
One more. Keep going. Keep going to your right. Keep going. That explosive move right there. The pivot, that wick came and touched the red candle. Look to your left. Look to your left. You got a rally base rally. That big, long, extensive move actually tested the basing and then exploded out of there.
This little wick right in here.
Right. It tested the red candle to the left. So look for your explosive move and then look left.
Basically, Brian, if I'm understanding Brian, what Brian's talking about is this little area right in here.
Yep. Well, look, that's your pivot. Then you got your rally base rally. That area right there.
This little area right in here.
Mm-hmm. And that candle that came out of there was explosive. It had a nice wick. And if you were paying attention to a rally base rally, you would have caught it in as it came and retraced, as Al teaches us, retraced back into that red zone. And the same thing happened right there. Yeah, same thing happened right there.
Here's a little base, and you can see if I take this one up to this little area right here, this is what we were looking at for the pullback. As Kevin was asking or mentioning why we did. I mean, again, we use these fib zones for our targets when there's nothing else there. But if I see a zone in here, which is inside these our three target areas that we look at, if I see a zone like that, you can just go and say, okay, this was the basing area. This is where it had a nice move up. It stalled, and then it left again. So this is where there's kind of taking a breath. Well, look where it came back. It came back right into this area.
Explosive move. Look to your left.
And then look and then look to the left and see where it left. And then when you get a pullback, sometimes you can gauge it's going to pull back into this area. Now, and this is like we say, it's a rally base rally. retest. It's retesting this little base here. If it retests this and then blows through, this thing's changing direction. That means it's got a lot more momentum to the downside. And if you break through this, well, your stops down here, well, save yourself some pips, and then maybe reverse position until it comes down, because it's probably going to come down and take the next area, which is right here.
And on this 1 minute chart, you're not seeing current over the last 15 minutes. There's really no demand zone or any support level other than the zone that it already went and retested. There's
look
nothing.
At the angle. Look at the angle of this move.
It's good. It's just nothing there to say, okay, there's support.
Yeah, it's not real exciting. This is exciting. This is exciting. This is boring.
Boring.
But
so you're looking for the excited move and look left.
Yeah. Now here's where right now, this is where the retest of this upper zone came. It came right in at the halfway between the 0 and the 23. It came right up into that 11.8 area, which I have a little bit of I marked that. And right now it's got a trend line. It's retesting this moving average. Again, it just gradually, this is what just tears you up with the if you're just sitting and watch this thing the entire time.
And the thing about that, where it stopped on my, of course, he does his fibs a little bit different. I pull a fib line retracement from a standard line to another line. Where it stopped is exactly where I thought it would, 82.21, because that's our 76 line. The first time it blew through it, this time it's slowing down at it. It doesn't surprise me at all. So I'm not going, oh no, here we go again. So I just stay patient.
Yeah. Now this was not a real strong rejection of this little pivot here. All it's saying that is it's getting up there, and now some people are coming taking some profits, or they're trying to get some early entries. But right now I'm still optimistic that it's still going to come up and hit the reciprocal of the pullback over the extension of the 0 line. But the 0 line is still technically your first target. It's got to break that. But once it breaks that, then we're looking at going on up to be working on this little area up in here. By that time, we're going to be out of this trade.
I noticed there was a question, not a question, but a comment. RSI is overbought. I don't use RSI very often, not on this stuff. But you can. I mean, that's another tool of confirmation if that's what you like to be confirmed with. Because that's all it is.
Now I'm right at my entry point. So right now I'm break even. I did take a little bit of heat on this one because I was a little more aggressive than Brian was to getting into this thing.
Can you repeat that again? Can you repeat that? What did you just say?
It doesn't happen very often.
No, it doesn't. I just wanted to hear it one more time. Can you go ahead and repeat that?
That you're always really aggressive?
No, I was a little more aggressive than Brian.
Oh, is that's
the part? However, you gotta carrot that with the fact that I was already in the trade before you were in the trade, got out of the trade. So I was aggressive first, but I was waiting for the pullback. All right, this is what we needed to see.
Yeah, now we're seeing that. Right now it's challenging our 0 line. We're starting to get a little bit more aggressive right now. You see how the angles changed on this from this angle to this angle?
Okay, so if we've learned anything, Al, we have our pivot, we have our rally candle, we have a 1 candle base, and if this thing stretches out further, we would have a new support area created on the previous candle. So which is, I can't read your number. It's your 11, wherever your 11, is that 11.8 there on your fib line?
This one?
One more down.
Yeah, this is 11.
That's where your new zone, if this thing will close strong, a new demand zone is going to be finished. And
now, right now it's tagging now we don't have a higher close yet on this. Here's the close. You see how it wicked up. I just pretty much drew that trend line just flat across. And it wicked up right up. So right now it's retesting this little area right here. Now we're going to see what it's going to do. If it can, this could be a little wick over wick area. This was kind of
Did we see our rally base, and now it touched that candle to the left, 2 candles back. Look where the wick came from. Doesn't mean it won't blast through it, but that 1 candle base is there. Let me drop down to 1 minute to see yours too. I'm betting it formed it.
And right now we have this 3. We're heading on our 4th green candle. Count these 1, 2, 3, 4, 5, 6 candles before you saw a closed red one. This is our fourth candle right now. We probably will get 2 more candles. If this little move here is the same as what is indicative of what this move's going to be after the pullback, then we should get our
Now, if we close if we close on this candle just right where it's at, even if I don't hit my target, it changes where I'm going to put my stop now mentally.
Now we have a 1 minute candle close above this. Now is this a 1 minute or 5 minutes? What's the time?
I'm on a 5 minute.
Oh, there you go. This is a new 5 minute candle right here. If we go to what our 5 minutes chart, you can see that this candle didn't quite close above this, but now we have a new 5 minute candle just forming right now.
And what's our strength meter say, Al?
And our strength meter says is that the Aussie is this second strongest, and the Japanese yen is the second weakest on the. Good. Here, I'll show you what the chart is as we're breaking our way through. Here it is, Aussie, yen. Now this is a little bit of the pullback area. But right here, these are the two that I'm looking at mostly. The Aussie's number 2, the yen's number 2. Aussie's number 2, the yen's number is 0. Yen is 0 on the 1 hour. Aussie strong. So you got Aussie strength, yen weakness, yen weakness, yen weakness, Aussie strength. Everything still says this thing's going up to the upside. I haven't got my target yet.
I'm close.
But I'm still looking. We're still optimistic that we're going to get through this blue. I'm still looking at the orange line as a target, but I said I'm going to be out of it before that gets there.
Do you agree with the assessment that now that we've had a new high, that our stop is closer?
We can actually move our stop to the bottom of this zone right here.
Right. That's where I'm looking at too.
Also, I still like the idea that this thing could still retest our 34 moving average. It could do that, but you can see where the yellow moving average, the 13, is still being respectful. It's still from the time. Here is a test. Here is our pullback. But here is the test. It's still respecting this 5 minute 13 moving average coming in. Now, if I wanted to be more aggressive, I could just move my target on up to this orange line or up to this zone. But I'm just not going to get greedy. I'm going to get my my small profits and just keep doing it over and over again.
I'm done. Mine's out.
Now you see that right now it still hasn't closed me out. The red line is up there, but the white, I've got to wait for that white line to get up there to take because of the spread. I needed the spread to have like a 2-point spread. And it's just sitting there. The white line's got to come up to hit my target. As soon as it does, I should be out of this trade. The red line's already passed it.
I love what you did with that orange line, though. Because let's say we have an explosive move above this 82.26 area, which is a blue fib line. And if I was really, strength meter was good and there was really no reaction to 82.26, which I think we will have a reaction, that line might be a point for an aggressive re-entry.
But you see how this 23%, you see how that the red spread line of this move, the red line's the spread and the white's the spread. That's where the spread is. You see that red line came right on up to that blue line. It didn't pass it. That's the sell line. That's basically where the sellers are. Seller says, I'm going to sell it there, but I'm going to wait for a buyer to come up to take it. But the buyer says, no, I don't think I'm going to. So right now, it's sort of fighting that little spot right there. And oftentimes when it gets like that, and I don't want to see it get that close to get me out of the trade and then getting stopped out. That just drives me crazy. So a lot of times you see when it starts hitting like that, I'll say, thank you very much. Get myself off the trade. So now we have a red candle pullback. So right now it's retesting this little area right in here. We did get a close.
Your pivot point at the high point is 82.26, which is that fib line, blue fib line. So it stopped exactly right where we thought it would.
See right there, that's that line. And that was the fib line that Brian said earlier before we even started this operation.
Which doesn't surprise me. We still doesn't mean it's not going to pass through it. It just means that was a point that we knew most likely we were going to have some sort of resistance there. So as far as trades, Mr. Al, I am done. There is no reason to get greedy today.
And see, what we're doing is we're just showing you candle by candle, tick by tick, blow by blow, how we analyze these trades, what our thought process is as we're going through it. And we're basically verbalizing everything that we're thinking and saying.
Not everything, because we couldn't do
Basically.
that. We can't do that in recording.
Yeah, yeah. But now you can see how this thing's pulling back. And it's just like, now I can say, I was like, well, oh crap, why didn't I just go and take the profits right there? I mean, I'm still profitable. Well, actually, no, I'm not either. Right now, I was about ready to hit my stop. But you see, what I'm saying is that spread, you've got to plan on that spread sometimes where it goes up, and that red line was tagging it. In fact, the red line actually passed it, but it was probably about a half a pip away from actually taking closing me out. And now I have to sit and say, okay, now what am I going to do? Now it's coming back to retest this area right in here again. It's coming back to retest this. It did break this high, but it really didn't. We got a little bit of a close, but there again, the sellers and buyers were pretty much in equilibrium right in this area. And we're now coming up to 8:30. So right now, this was the move before that 8:30 announcement. Now we're going to see what's going to happen when the announcement comes. This may pull back. It may come back all the way, drop all the way down here like a rocket and stop me out. But right now, it came up. This was the upper 25% zone right in here. It broke it. It actually made a new zone. We just extended it a little bit. The orange line's still there. The blue line's still there. But now this pullback area, it really hasn't changed any, but you can see where the pullback now, here's my 50%, here's my 50, 60% zone right in here. It's still respecting the yellow moving average. Like I said, I'm on a 5-minute chart right now. It's still respecting the moving average. The green hasn't crossed. Now, I bet it probably has crossed on the 1 minute, maybe. If I go to my 1 minute chart, I've got the crossover right here. I've got a break of the moving average, but see the consolidations all going in right in here. Now, it still may take another run at it. But now I'm investing more emotional inventory because it didn't close me out. Look how close it came to that. And now I'm right back to where the first pullback was. And we're also looking at, there's an announcement coming here, another 2 minutes. So I'm just going to let this run just so you can see what's going to happen, Joe, how this announcement may affect this.
Amazing turnaround on Gearbox, by the way.
Yes.
Amazing.
Yeah.
Amazing. I was down 190 something, and now I'm up $4. Insanity. Good stuff.
Do we have any questions in the gallery here? Anybody have any questions, comments? So,
well, I've got a question from Ann. I'm just going to read it out loud in case people need to know the MMA coordinates. We use 5, 13, 62, and 200.
Well, actually, in the 34, I'd have this 30.
I was just going to ask you about that one.
Yeah, actually, I like the. Actually, I find the 34 is more. The 200 is a good one to use for the longer term type of thing, but for the type of things we're doing, I really like seeing the price being above the going long above this aqua 34 moving average. The 62 is usually a good gauge that if it starts breaking through the 62, it's probably going to go lower. And see, this thing's starting to, it's retesting my little zone right here.
Guys.
Yeah, and these are all exponential moving averages. So we have the green is a 5, the yellow is a 13, the aqua is a 34, and then this orange one is a 62. Sorry if I didn't mean to interrupt you.
We step on each other all the time.
I think I get more stomped on than you guys do, though, to be honest with you.
I'm usually doing the stomping.
But you see how this thing's starting to retest this area. It's going to retest it again. Now we do have, we're going to see if this move down here, we'll break this pivot in this area. Here's the announcements coming. We're now 1 minute into the announcement. You can see how this thing's reacting.
That's a fun trade.
The yen is picking up a little bit of strength right now.
I just pushed 2 of our links into the chat box for anybody who is interested in Telegram updates. I am blown away by this gearbox. Just here in the last 2 minutes, it went from $3 to $40. It is finally turning the corner for me, and it's the U.S. CAD. The CAD is going crazy.
Up or down?
I was in a sell position, so I'm assuming it's going down.
Didn't we have 8:30 news on that?
Probably. I don't pay attention to news with Gearbox, but I'm assuming something's happening because that's crazy.
No, I know we don't trade the news, but I'm
just crazy. You would know more about it than I would, for sure. Nice test of that 82.15 area again, Hal.
Yep.
Nice test of it. Now that's a good strong test. That's a good strong test. Doesn't mean it's going to hold up, but that's a good strong test.
And now you notice that we had this pivot high over here, and now we have this. If we look over to the left, you can probably see where there's probably some area to the left of this chart that's going to give us a. Let's follow this blue line, because that was one of our reference points. I'm going to go to a higher time frame to see really what's over on that area. And you can see, like right now, look at this big candle right here. And here was the end of this wick. It broke this wick. Here's where this is the area where it's headed. And that's our basically right up at our last target zone. So that's one reason why I'm still pretty comfortable with it's going to get my target on this. I'm pretty much back to break even again. Get my 1 minute chart up. It seems to be having a little problem getting through this. We have consolidation of all of our moving averages again. Everything started hanging right around this. See how flat this arrow move, this blue moving average is. It's pretty flat. We're starting to get a little crossover here. We did get a rejection that it did check this 62 moving average. It passed it, checked it, couldn't hold it, came back up again.
Excuse me, Al.
Yes.
We have a question from Pepin in the chat.
Okay. Okay. As the bars drop, yep, I see it. As the bars drop to the lower box, you place a counter trend. Let's see, as the bars dropped into the lower box, I'm guessing this box right here is what you're talking about. When we have placed a counter trend. Well, I'm not going to place a counter trend unless I start seeing it really going against me. There's two things you can do. Either one, you just take the stop out. If it goes through and breaks this, you could just take the stop out, or you could go and take a counter trend. And this is something that we worked on a little bit yesterday, was you could say, okay, I still believe this is going to be my target, but I still also look at a bounce. So if it comes and breaks here, you can what you can do is you put that hedge in, so you stabilize your drawdown, and you maybe take a hedge position, which stabilizes the drawdown with that, and then you take another position short. Now you have two sell positions. When it comes back here, you remove your two sell positions, and then you maybe, so you make some profit on the downside, lock in the profit, close it out, and then maybe you could take another buy position up here to dollar cost average your up move, and then you get out. That's how you can get out of a, but it's a little bit, it's a technique that works, but it could also get you into big trouble too when you do that. But it does work a lot of times, especially if you know what your range is, where your the price movement is between your upper and lower zones. Because remember what we were saying is the reason we draw these upper 25 and lower 25% zones. Let me go to a higher time frame here. The reason we draw these big shadowed areas is because that's the area where the price has found itself to be going sideways. And so it's been going sideways for an extended period of time, although we're just trying to catch these little trending moves in between it. So if we start seeing we're in the middle and it breaks out to the wrong direction for us, we can take a hedge. When it gets down here, we take the profits because we're looking at it's going to bounce from here to here, back to here, back up to here, and it just keeps doing it until it breaks through these areas. So it's not, basically, I don't do that a lot, but I will do it on occasion if I get myself caught in a trade where, even like with this right now, we actually took a buy because we're still looking for this for a target. Well, we have lots of room to the target upside for the shadowed area. If I look at get a higher time frame chart here, I saw from where we are right now, I've got a lot of room to the upside. I still have a lot of room to this target and that target. But if this thing decides that, okay, I'm not going to go to this second, I'm going to hang out in this bottom half of this, we got the three lines, this hanging out in the bottom half. If it decides it's going to come back down and retest this, well, I can take a hedge till it gets back down here. When it gets back in here, remove my hedge to take the profits, and then I can dollar cost average the other side. And then just wait, because eventually it's going to come up here. Eventually it's going to get up there. Now it's the question: how long do you want to wait? Do you want to wait a couple hours, a couple weeks, a couple months? I've seen Brian be in trades for literally 3 months. And I go, you mean you tell me you're still in that trade? He goes, oh yeah, I'm still in the trade. But that's not what we do primarily. Primarily, we're trying to get in, get out, and our stop is tight enough to where, you take the hit and reverse positions, and then just you have two choices: take the hit and move on. Or try, if you still feel confident that it's still going to hit your target, well, then you just go ahead and then take a hedge to stabilize the drawdown, because a lot of times you don't know how far it's going to draw down. And you stabilize it with like a $20 loss, and it can go up 100 pips in either direction. You're still out sitting there with a $20 loss. It stabilizes, it helps to, until you can figure out where it starts showing the trending pattern rather than going sideways on you. Hopefully that answers your question.
Hey Al, I know it's Friday. Can I share my screen? Hopefully I think this might help a little bit too.
Okay, I'll stop sharing.
Is that cool? Let me see if I can figure out how to do this. Okay, can you see my screen?
Yeah, I do. Okay,
so this is the Aussie yen pair. So if you had no tools to use at all, what would you do? Of course, I'll be drawn right here for one. So when I'm looking at things, and it's not just color, but color has something to do with it. I would be looking right here at that zone. Remember I said always look left? That would be my first one. And part of it has to do with color. There's really nothing in here other than this wick over wick that I see. And I draw lines normally. So this would be another one. But if you look, that was where we started our move. So that's kind of what was once resistance becomes demand. So notice we tested it here. We broke through it, came back. It's the same zone. So this is obviously with the yen pairs. Remember that the whole numbers are huge. They love whole numbers. Bankers like, and remember that's our safety currency is the yen. So that's our main line right there, 82. You can put 82 and a quarter as your next one, because remember bankers don't deal with math as much. They just want price. And you will notice if you see what's happening here that my chart's in the 82, it's set up as quarters.
And there's a whole theory called quarters theory.
Quarters theory. I studied that a number of years back. But just going with quarters, we can tell a lot. So when you think there's no organization inside of the charts because it's all over the place, it's got wicks everywhere, take a look at, get your chart on a quarter. You know, just start with a quarter. I think I'm on the 15-minute chart here. Just start with the quarters. If you had nothing to use, and let's move this box, and you knew nothing really about trading other than you heard a rumor that the yen pairs like whole numbers and quarters. You can see right here, right here, right here. So 3 places. This one's a little bit weird, but it's the wick over wick, so that still qualifies. This one's good, solid, because it broke, came back, tested, and then went back and went back down. Now it tested it here, and we can see the back and forth movement. This one, it seems to be a foundational one to me. 8150 seems to be foundational. Just looking at this. Now, that's me just drawing lines. So if you ever assume that there's nothing in order, you're fooling yourself in your mind because everything's done in order. Now, the cool thing about it is we mentioned the 8226 fib number was blue, which is right here. But look where our price currently went to, the 8225, even if we didn't have our tool there. And I see a demand zone right here. Remember we said find the explosive move up and then look left to see where it came from. So I can do things like this as I'm practicing. Something like that. It's close. And that's a key point right there. And I can go practice looking for places where explosive moves happened. It's easier to see going long when the trend is up, but you can do the same thing doing this. Look at this explosive move. Go to your left. This is a little larger zone than I like, but it's a zone nonetheless. I like to have 2 candles in my base, but I could do this all day long in practice, and we've done it all day long. Now, the cool thing about it is we now have a tool, several tools that automatically, the key about it is making it as mechanical as you possibly can, getting rid of as much noise you possibly can. But we've done hours and hours in front, so our eyes are attuned to different things that you guys may not be used to yet. The rally-based rallies, the drop-based drops, price action movement. So when I come in here with my tools that I have here, still have the same moving averages, and I have a supply and demand tool that helps me confirm my order. Now it draws the lines for me and my fib tools, and I blow it up. Remember this 8225 we said was key? It is a fib number. 8225, go to 82. Let me squish this back down. 8250. Fib number's green is 47. 82 is 8205. So we're not looking for precision as far as to the penny of a pip. We're looking for an area that we can expect. Remember we drew a demand zone? Well, the tool does that for me right here where I said it would be. Remember we were at up here? There's our supply. This would be a great place as we were talking about counter trades. If this thing rises up, we could very well take a nice counter trade right there. That would be a good place. And why did we have problems moving up past the 8225 area? Because we have a level on level of supply and a fib number. That's why my target was just before this fib, because I didn't think we could get past that very far. And so far we haven't. That doesn't mean it won't, because every supply and demand zone does get beat up somewhere. But that's just showing you that the tool plots everything for me. So when I come in here, and you can see all my trades, there's one in one candle. There's my other one. Took a little while. That was a 45-minute wait. But if I come in here and take my fib retracement tool and I plot it on there, now I'm getting the playground within the playground, just like Al does. Just like Al. So it tells me where I can expect. I said 82.15. There was a nice zone on the 5-minute chart. We're in that place right now, but I believe it's going to come on down to where we said it was the last resort, which is this one. And we very well may be making a change. but can't tell. It's too early. There's no structure saying there's a change. Because like Al does, he draws lines. This yellow moving average is going to be the key for me to tell me that this isn't a possible change.
Yeah, right now I'm seeing where this thing is actually changing over. It looks like it's about ready to break through that zone that we're looking at. So I'm going to pull this trade because I'm not going to let it go. I'm going to hold off just a little bit more and see if that zone holds. But right now I'm looking that this thing's going to go down to perhaps retest that first target area that we were looking at.
Yeah, that this area down here.
Now this is where I can say if I'm still believing this thing's going to go on up, I can take a hedge. I have a buy order and I could take a sell order, but I don't want to take the sell order just yet because that zone still could hold.
You got three good things in your favor. You got this moving average, which remember algorithmic trading is going to be based on moving averages. They're going to mathematically, when this price hits this, you want to do this. Then you have this nice rally, one candle base, and explosive move out. This is your wall. But what makes this wall powerful is this fib line at 8204, which is what we called out earlier today. We called the 8204 and the 8226. Those were the two lines before we ever got in a trade, our playground. So this is obviously the lower in the zone, the better the trade. If everything in the Power Hercules tool tells you to be long, this is a good trade because your stops can be small. There's nothing wrong with taking it down here. But you got to get out before this, especially when you see orange and red or orange and pink. Fuchsia is a good color.
This is why I said that a lot of times I would just go and close it out when it comes up that close to where it was, and why I didn't close it out was more for demonstration purposes than anything. But the bottom line is that look how much more emotion you have right now. I would have been out of the trade 20 minutes ago, 30 minutes ago, and I'm still waiting to see if I can get out. So I'm spending a whole lot of extra time all because of a half of a pip that it didn't close me out.
Right.
And that's why I said I go for my 7 pips. Sometimes I'll cut it off at 5. Most of the time, if it bounces like that, I just close it out. But you can see how close it came to get my target, but yet it still couldn't quite punch through the target. Now that doesn't say it's not going to, and I'm still optimistic, not knowing for sure that it's going to come up and retest this, or it's going to break into that second level of those orange trade zones that we're looking at for that target that we're looking at.
And look where our line is. This is the control line right now. 82.15, 82.16 is our control line for this short term. And if we were to draw lines, this is when I got in on this one, you can see where I got out. I got out at the 76 because I expected it to stop, and it did. Not because it's magic or, it's going to guarantee, but I knew that at 70, I wanted to go ahead and take my profit, even though it wasn't quite 7, take my profit as soon as it hit the 76 because I expected it to come back down to where I could re-enter, and it did. And then I re-entered it again. And where did it come? Where did I get in at? I got in right here at the 62 or 61, however you want to look at it. It's exactly where I got in. And then I wrote it. It came down. Where did it go? It went to the 50. It blasted off for the 50. I would expect it to come right back up to here again. But it may not close above there. So the next time, if it doesn't have a higher high, I would expect it to come down next. It kind of already got down to this area. It's close. It could do this. But I would definitely expect if it doesn't make a new high to come to here.
There's just right now I'm right at pretty much break even minus just a little bit. It just was briefly positive. Now we have a rally. Go put it on a 1 minute chart.
Yeah, tell me where you want. I'll go.
On
1 minute?
Okay. 1 minute. And you can see where there's that nice strong. We have 2, 3 nice, that one extended range candle. We got 3 nice green candles. We have a nice little red candle. Came right up to right up to that 82.22 area. And now it's fighting. It's still fighting that orange zone up there.
Right there.
That's the
now this is a 1 minute supplies.
It came right up and it got pushed back. So right now we have a rally. It's basing right now. We have that one red candle in the middle. We have another green candle. We'll see if it's going to break. That green candle is going to break up to
Everything this looks nice. The moving averages look nice, but
Yeah.
look here at the pivot, what it created. A pivot, it's a drop base rally, and it did it right at the 50. So if I was Al and I didn't like holding this for a long period of time, I'd have my stop, the spread below this zone here. So 82.14, I have it my stop at 82.12.
Right now, the way I'm going to play this one right now is I'm back to break even. It's starting to push up again. If this thing can't push up through where that last wick was, I'm just going to pull this trade and just take a small profit on it and just call it a day. Because I'm not going to let it go up there. And I mean, I'd like to see it hit my target, but I'm not going to let it retrace back again. At this point, I'm not going to let it retrace back again to worry about whether or not, because right now it's making lower highs. Now it did break a little bit of a trend. If you draw a trend line from that pivot high to where that candle where you're, there's a trend line from where the green arrow to the next first pivot right there. It did break that trend, and you can see right now it's but still fighting against that little zone up there. And that's just the question: is how much do you want to keep fighting? How patient do you want to be? Yeah. How much do you want to just say I'm just going to move on to the next trade? Or do you want to take another? I mean, how much emotional inventory do you want to pay for this trade? I mean, I'm still optimistic that it would go up, but I said I like being. If I can't get in and out of a trade within about 20 or 30 minutes, I start rethinking. Well, I'll just move on to something else.
The cool thing about the 1 minute chart too, there's nothing really in the 1 minute chart that tells me, except for this fib number. Now we have supply here, but this fib number, there's nothing over there telling me, okay, there's some area of resistance here. Obviously, when you have a pivot number, the pivot is a reaction to some price left. This pivot was a reaction to this price right here. So anytime you see a pivot point, look left. Pivot points aren't rally-based rally or drop-based drops. Pivot points are a reaction to a rally-based rally. So all this nonsense here, all this noise, if you can get a pivot and a rally-based rally, those are always good. That's this right here. This is all reaction to this part right there. Pivot, rally, base, or drop, base, rally after pivot. This is a pivot, drop. So you got rally, pivot, rally, base, drop. That's what this is. So this is going to be a reaction somewhere left to a drop, base, drop. Old terminology, Al.
Yep.
Are you still in it?
I'm still in it, but I'm about ready to say, no, I'm tired of playing with this one and moving on.
What?
But again, everything's still in my favor. The yen is still weak. The Aussie is not as strong as it was, but the yen is still the weakest of all the pairs. So there's still room to the upside, but I said it goes back to being just a little bit profitable to a little bit more. So it's got a little bit more of a push down, but that doesn't mean it's not going to still come up and just get a nice spike and get my target. I mean, we're only looking at 7 pips.
Right.
And so, but right now I'm looking at if it can come up into that 82, 24, 25 area, that quarters point, I might just close it out and see if it.
So where would you put your stop at this point?
At least we might stop to break in. Well, my stop, I haven't changed my stop any.
You're still down here?
I'm still down there. But if it goes and breaks through that 82.13 area, which is basically where there's another number there, 82.11. Right. If it closes below the 82.11, I'm out of this trade.
Absolutely.
And so right now it still keeps pounding away at where I got in. And,
it's nasty right now. It's a nasty pair right now.
Yeah, it's not fun. It's not fun. And I said, nothing that I hate more than being where I just barely take my profit and I have to worry about getting stopped out. So, and every time it gets back up to where I got into this trade, right to that 23% line, every time it gets up to that, it wicks up and it can't seem to close above that anymore. So with
wanna
that,
look-
I'm just gonna close this thing out and I'm done. I don't want
You
to.
want to look at one more, see what it looks like?
Let's take a look. Let's try looking
go
at the British
Pound yen, pound
how
yen.
about pound? Let's try pound yen. Yeah, go ahead. Look at the pound yen. The
Let's
yen
see
is
what it
still
tells
weak.
us. Oh, this is
The yen
good.
is still weak. The pound is the strongest on the 30-minute chart, on the 15-minute chart.
This is good. This orange zone's gone, so I don't even pay attention to it. I like this trade. I'm not doing it because I've already taken my profit for the day. I'm at 4%, so I'm not going to push it just to be trading, because you can overtrade when you scalp. You can overtrade, but I would definitely be looking to go market order here. So let's just say I did. Let's go ahead and put our horizontal line. I'm in right here. We'll make it green. So I'm in. And with spread, it would be actually a little higher. So I'm already losing money. That's always good. And that's what, the 85.22. So I would want to go 85.29. I like it. Make that blue. Make it aqua. You like aqua. And then I'm going to take this, and that would be down to 7. I love the structure of how this looks. My stop is below my blue. So there's my trade. Now, remember, this is going to go away here in about 3 minutes. This will be clear. And so I did something. I didn't draw my lines out like I normally would. So let me do that. It's they're somewhere up here because I've been on this one before. So let's go ahead and do that. But I know where my 23% zone is. That's where my trade's at. And so I'm going to take my fib retracement from fib plotter, call that Atlas, to there. And I'm in the lower 23%. Notice my target is before the 38. Where would I expect it to halt? At the 38. So everything's good. Everything's good. The only thing I don't have that would make this perfect on a 15 is a zone here at this 152.10. So let's drop it down to the 5. Let's see what we got. Explosive move. That was a zone, but there it is. It's just been tested already. That zone right there has been tested. You want to look at it on the 1 minute, Al?
Yep. No, go ahead.
Okay, of course you do. Of course you do. Let's see what it looks like. And the cool thing is my tool's doing all the work for me. Okay, I like it. Now, Al would have probably not got in as fast as I did. He would probably waited down here in this area where it's at now. Pound is strong. 5-0, 5-1, 6-1, and 7-1. So pound, this is just a pullback as of right now. The only thing concerns, obviously, there's a supply, there's a pivot. So that tells me back on the 1 minute chart, there's a drop-based drop somewhere that this is respecting. But it's, I mean, you can see on a 1 minute chart, it's pretty simple. That's what's happening there. You've got a channel happening. It looks like that. Doesn't get much easier than that. Doesn't mean it's going to work.
Nope. Right now we had just a nice little pullback, and I would say right now would not be a bad place to maybe take the trade looking for the 7 pips.
Yep, I would agree.
It's probably pulling back to a. Oh, it
wants to go a little further.
It wants to go a little lower.
This is why I don't watch the 1 minute chart. I don't have enough emotion to handle it.
I think you're going to get a bounce off of 52.15.
52.15. So you're thinking this area down here, which is right in our demand zone. We got explosive move, rally, base, rally, came back and retested it a little bit and then took off. It's just going to come back and retest it again. But I got plenty of room. Plenty of room. And if it doesn't work out, I didn't take the trade. It's just demo. Drawing lines.
And so remember, today's a news day. It's got, I mean, right now we have some news, I think, coming out at, well, we had some at 8:30, and they have all day. We have the G20 meeting. So that's going to be, you could get some volatility all day long. And so, you know, it's like, if you're profitable for the week,
leave it alone.
No, leave it alone. If you're just in demo and you want to practice, this is a good time to practice. But just make sure you stick to the rules. And be very precise and very consistent in what you do, because remember, every trade you take in demo, you're starting to program your brain to be looking for certain things and be doing certain things. And you want to be programming with the right information. You don't want to be programming it with saying, oh, let me take this trade and see what happens, because all you're doing is giving yourself a false sense of either it's okay to do that once in a while, as you're experimenting with different things, but you don't want to be doing that on a consistent basis, because the main thing is you want to be consistent, you want to be routine, you want to be mechanical with what you're looking at, and train your brain to be able to get that BTE indicator, that indicator between the ears indicator, get that working for you, because that really is the strongest one that you have of all the indicators that you use. And with that, we're about at the 9 o'clock hour. Is there anybody have any questions or comments? And if not, we will wrap this thing up and start the weekend.
Yeah, and I'll let this run and see what it looks like on Monday.
So, and with that,
I'll stop. Wait, got somebody in the chat. Let's see what we got here. Oh, happy weekend! Thank you so much. I'm going to stop sharing.
Again, we said we value every one of you. We love having everybody in the room. We like having the dialogue. And I said our goal is to try and teach you how to trade, how to be able to see this stuff on your own. And it's not going to happen automatically. It's going to take some time. Give yourself the ability. Don't beat yourself up if you don't understand it right away. Just stay the course. And eventually this stuff is going to start making sense. And as you become more confident, then I urge everybody to start thinking about getting your mics turned on and sharing your screens, and maybe talking us through a trade, and that way we can make some comments or some suggestions about what you're seeing, and maybe start bringing some focus to what you're doing. I said you learn more by teaching than you do by just sitting in the classroom just observing. There is a point where you have to have the knowledge base to know what to ask and know what. But once you start looking, they say, okay, I think I've got a handle on this. Show us what you have. Show us what you're doing, and let us make some comments to maybe help keep you on track or to steer you into. Now, if you're off the track a little bit, we can get you back on track. So with that, thanks again. Have a safe weekend. See everybody on Monday.
Hey, everybody, have a fantastic weekend. See you all on Monday.
Thanks, Eva. Thanks, Christine. And Brian as well. All right.
Brian, he's still there.
Oh, Brian's still here?
I don't know. I said thanks, Brian, if he's still there.
Yeah. Okay. All right. We'll wrap this thing up.